Welcome to Business Venture Exchange Africa, right here, proudly brought to you by the Insurers Association of Zambia. We're here at the Insurers Conference 2017 in Livingstone, Zambia, and we're happy to have on the program right now the Managing Director of Continental Reinsurance in Botswana, and he was one of our panelists and speakers during this year's conference, Mr. Cassim Hansa. Mr. Hansa, welcome to the program.
Thank you very much for having me.
Thank you. Now, tell us a little bit about insurance in Botswana and how the industry is performing.
Industry is generally performing well, like all other southern African regional areas. It's potentially, I may not have my numbers actually 100% correct, but it's about a 1.3 billion pula revenue market, and it's doing fairly well profitably. So it tends to grow faster than the general economy. There are about a dozen odd insurance company players there. And I would say probably the top five maybe make up a significant chunk of the business. As is with most insurance sectors, you find a few that generally control the better part of the market. So it's very similar to every other market in the southern region.
Right, and what are some of the key challenges that you experience in insurance and reinsurance in Botswana?
Typically, with again all markets, would be the challenge of pricing, collection of premiums in the supply chain. Brokers would be complaining about timely supply of premium to themselves and then to the insurance, and so it goes up the supply chain. The other key issue would be, I mentioned pricing, and then of course what is regarded as flight of capital, right, or the externalization, exporting of premium.
Right. Now let's talk about unlocking Africa's potential. We're here at the Insurance Conference and we're talking about bouncing back from the hard times. How would you describe, or where do you think Africa's potential in insurance lies?
We always say that insurance is a key part of the economy, represents the backbone of any economy. And but apart from that, the issue then would be, as with most of the speakers yesterday in talking, how do we actually unlock that? So we have a lot of talk, there's a lot of conversation about various parameters or the dynamics of our industry. And I've been contemplating, thinking about this, and from hearing various speakers, including a recent CEO summit of ours in Senegal, where we had the former president of the African Development Bank speaking. And I like what he said there, in the sense that he gave us a particular model that had a little, it's a triangle, and on the top end of it had the issue of policy, and on the two other ends of the triangle it dealt with means and resources, and finally execution. Now where am I going with this is, when you say unlock the potential, I think we need to start creating some very clear ideas, maybe in the form of a model of what needs to be done.
Right.
Because yesterday, in the responses that the Zambian market gave to the way in which the insurance industry is operating, I must say I was disheartened by it when we spoke about policy regulation, when we spoke about means and resources, and even execution. And it's a reflection that there's much to be done by us as insurers and reinsurers in the marketplace for us to instill the levels of confidence that we would want in order to increase penetration into the market. So what that implies there's a lot of training to be done, skills development, competencies, and the requisite capital to come in so that companies have the capacity, and then a lot of facilitation in the market to have the markets better understand the role of insurers, so we can instill confidence, and have the markets basically appreciate insurers for what the purpose it serves.
Right.
So I think in that way, I'd like to mention the model then that I kind of raised yesterday, is that I said for us in unlocking the potential, maybe we need to consider a circle, and below that, because this is very important, we need to understand the environment in which we operate. A circle where we have the parameters of unemployment, inequality, and poverty. That's the context in which we operate as insurers. And then we take the former president of the African Development Bank's triangle of policy, resources, having the means, and execution, and we put that on top of it. And then finally we put another triangle which at its 3 points would have competition, because that is important, that we maintain fair market practice. But at the other end is cooperation and collaboration.
Right.
So that the markets, because we are all fledgling, we are emerging, we need a bit of nurturing. And so the markets can work together like that. And then at the other end, I try to keep it all in C's so we can remember it. Confidence, capability, and capacity.
Now, Cassim, would love to know, does Botswana also experience the same problem we have here in Zambia of consumers complaining of the insurance companies not paying out their claims? And if so, why?
You see, on the payment of claims, we have to look at what are the fundamentals for an insurance entity. How does it actually operate? And I think to answer your question, let me first go with dealing with how do insurers establish their cost. And yesterday, of course, we had this notion that insurance companies are to be regarded as, or are they really casino players, gamblers? Let me try and quickly differentiate why we are not gamblers. If we take the example of a balanced coin, and if you toss a coin, at the point of when you're actually tossing it, you're trying to make a decision, will it be a heads or a tails? That's speculative, that's gambling. And if you're prepared to put money down on the fact that you think it's going to be a heads or a tails, if we're making the assumption the coin is balanced, clearly that's speculative, that's gambling. What insurance does, in the same example, is that it understands that in the long term, the trend is going to be 50% heads and 50% tails. It may vary from that, but it's generally going to be that in the long term. And we understand that nature of the game of tossing a coin, a balanced coin. And so that's why in insurance, it becomes a case of what are the risks that you're taking on board as an insurer. And generally speaking, for every $10 you collect, you know that you're likely to be paying out, let's say, even as high as $6 in claims. Where does the other 4 go to? 2 would be going to the broker potentially. 1 would be something you would need to run your business, to pay your salaries, your management expenses. And the other 1 you could regard as an underwriting profit to pay for your reinsurance, your retrocession, or whatever it may be, but also to put some money aside for the potential for bigger claims to arise, catastrophe. But it gives you a margin nevertheless. Of course, you're going to invest your 10 and you'll get an investment return as well. So that's how insurance generally operates. Now the problem is, if you start charging less than 10, that doesn't mean the risk you have on board, the claims are suddenly going to change from 6 and go down respectively. It implies that the claims will still be 6. But if you're making a decision to actually charge less than 10, and if you go to 7, you're going to start having problems because you still have the 2 to pay to the broker, you still have your management expenses, and you still need, your shareholders at the end of the day also still want to see some underwriting margin. And that's why pressure lands at the desk of insurers on the claims management side, is how do they then deal with the fact that there's not enough money to be paying for claims. And so the analysis of claims, the payment of claims becomes so much more difficult and protracted in a way, because to a certain extent insurers have no other way to manage their business. And I think this is where we get it wrong for ourselves. And the difficulty with insurance versus other very tangible industries, you know what your costs are at the end of the day. In insurance, when I take on your risk, at the outset, I don't know when you're going to have a claim, if you're going to have a claim, and when you do have a claim, how big that claim is going to be. And so that's why I can go from charging you 10 on the basis that I think you're going to have claims, or I could even go, if we talk the extreme, I could go to 0 because I just kind of feel that over the next year you're not going to have any claims. And so there's an intangible aspect in the analysis which then leaves us open as an insurance industry where the price can move from one end to the other. And I think that's the reason why it becomes fairly speculative, and why yesterday you saw that the industry itself gave itself a very poor mark on its risk management and the ability to use calculated science behind managing its pricing.
Right. And how is that being managed in Botswana?
In Botswana, we have the same difficulty. I mean, that's why, to my mind, we have to have in the importance of market statistics. The market must be responding and providing statistics through the regulator, and have that feedback to very quickly establish that their pricing is kind of going pear-shaped or is awry, and needs to be corrected to a certain extent. But it's why you have the lows and the highs. It's cyclical, and sometimes in the insurance industry we talk of hard markets. That's when the pricing has gone up, and it usually stems from the fact that there's been a poor claims experience in the prior years. And then, of course, capacity increases, and there's far more capacity in the market, and then the price goes down. So it's fairly cyclical. The issue is to kind of keep the cycles, not the amplitude of the cycle, not too high.
Right. The biggest lessons you want Zambia to remain with?
Well, the biggest lessons is from yesterday's responses to some of the questions I put forward. As I indicated earlier, I begin to realize that there's a lot of work for us to do here. So there's a great deal of work to be done in building our competencies, the skills, the knowledge and ability, of course, which are the parameters of competence, and then to look at our capacity and to build the confidence from the marketplace. So this is key. I think, to my mind, we got to get increased penetrations of insurance in the Zambian market. So you have to build the confidence, and the insurance companies have really got to get their act together.
All right. Thank you very much, Cassim.
Okay, my pleasure.
Thank you. Thank you. Well, you've been watching Business Venture Exchange Africa, powered by IAZ, and we're chatting with Mr. Hassan, who is the Managing Director of Continental Reinsurance from Botswana, giving us some key lessons on unlocking Africa's potential in insurance. I'm Faith Chitulangoma. Thank you for watching.